righty, welcome to the People's Show. And we have a very, very special guest in the People Matters show. Today we have one of my good friends and also a celebrity in the mortgage industry,
I don't know about that, but I got
founder and CEO of Equity Prime Mortgage, Cuban-American, one of the most influential mortgage professionals um, under 40 at the time. I think that you're not 40 anymore, but
I'm in my 40s, but I'm not under 40 anymore.
co-chair of the MBA Affordable Housing, used to be board of directors for the MBA, NARAP chair for corporate board of governors. You have your own podcast. You have, I think that you have also interviewed people like Gary Vaynerchuk, which I think that, so, I mean, you are a celebrity, but also a good friend. And I have to say, to start this, that there's only few people in the industry that I know that are as humble and as unique like you, Eddie.
Thank you. I take that with a compliment.
So, why don't you tell us briefly about your career? It seems, I mean, you are Hispanic, Cuban, but Cuban descent, but just tell us briefly, how is it that you made it all the way to become a CEO?
You're talking a journey. You're talking a journey that's crazy as it sounds. Started 20 years ago. I got in the business 23 years ago. However, first I was an originator, then I was a sales manager, and then literally like in 2 weeks or something, whenever the 15th is, it'll mark 20 years that I went out on my own and started my own broker shop and just really started the journey of how do you become a CEO? Well, at first, usually you become a CEO because you start the company. However, to your point, that doesn't mean you know what the hell you're doing because you really don't.
Hmm.
Don't let everybody tell you. Usually, when you start a company, it's after 10 years that you've survived that you kind of realize you don't know what you're doing, but you know enough of what you're doing to be successful, but not to go to that next level. So it was really an evolution over the next 10 years after that. And having the right advisors, having the right executives around you, having the right people that not going to tell you what you need to hear, but not, excuse me, they're going to tell you what you need to hear, not what you want to hear. Because unfortunately, too many times as leaders, we get yes to death. And I rather, have the challenges served hot than cold because that way you can get to a solution and you don't waste time. Usually that's the biggest thing. So that was kind of my evolution. It was a long process. I made a lot of mistakes. I'm proud of the mistakes because I think what holds a lot of leaders back is they're not decisive. They don't make decisions fast enough. And more importantly, they're worried about the strikeouts. But I think leadership in life is a lot like baseball. If you go 3 for 10, you're a legend. You're going to fail 70% of the time. And that's completely okay because it's from those failures that you learn.
Right, right. So let's go on the two stages here. One from loan officer to broker, and then broker to a banker.
Mm-hmm.
Walk us through the first one. How is it that you decided to go from a loan officer to a broker, and why?
Father had been an entrepreneur when he came to this country. My uncles, I had kind of learned that journey. I didn't know if I was going to do it until I found something that I was very passionate at and passionate and good. I always say this to people like, you can be passionate about something, but you also have to be pretty good at it. But what I've learned is if you're pretty good at it, you usually become passionate. That's just how it kind of goes. I always enjoyed people. I'm a huge extrovert. I love meeting people, love being around people. I enjoy my quiet time because that's actually a time to really recharge. However, my quiet time is like an hour a day. Anything more than that, I'll probably start getting a little bored, to be honest with you. And then, I was at a company, they promoted a manager that I didn't respect. And I just said, oh, we got promoted because, and I didn't even go for the position. So it's not like I was hurt by it. I said, oh, that's who they're picking as manager? Oh, Lord. So I just said, screw it. I was younger at the time. I was 27, 28 years old. I bit the bullet. I just said, oh, let me start this. And then that worked. And that was in 2005. And then infamous 2008 happened. Luckily for me, from a prior experience, because I'd been a stockbroker in '01. So when the dot-com crash happened, what a lot of people don't know is they started blaming stockbrokers for everything. They were the ones that caused it. They misled consumers. It wasn't the consumer's fault. Well, 7 years later, fast forward, the only thing they changed in that conversation was mortgage. They changed from stockbroker to mortgage brokers are to blame. We, the banks, are the safe people. Let's not forget that the banks were the ones that lent out all the money, but that's not to be discussed. That's why they had to get bailed out. But that's neither here nor there, because everybody always wants to pass the blame on somebody when I always say collectively, the crash had universal blame from a lot of people. However, from that experience, I said I either got to go all the way in or I need to go all the way out and find another industry. And at the time, I had like a 1 year old at home, 1.5 year old. I didn't think it was a great time to exit it. I really had a passion and loved it. My dad had just died a little bit before that. He had died in September of 2007. And I started thinking about doing the next level, going to become a mortgage banker in 2008. October 2007, and really started taking the steps early. In February as well. February seems to be a big month in my business career. In February, I morphed it from a broker to a mortgage bank. 20 years ago was the becoming a broker. 17 years is about to become being a mortgage bank.
Okay. So why did you decide to jump from a broker to a banker?
For that reason.
And this is a two question because there's a lot of brokers out there that are in a good position right now, and they feel, and then the question is, should I jump or not? Why did you decided to jump from a broker to a banker?
Well, at the time, it was very obvious what was going to happen. They were going to blame mortgage brokers for everything, and that was going to be the scapegoat, and regulation and laws were going to come into play because that's what happened in 2001. And I'd been a stockbroker, so I knew the movie. So it was more about survival. Did I want to stay in, or did I want to go to the next level and thrive? I've never been somebody that likes to sit still and just play the odds. I've always been a high risk taker to go for it. I felt like it was the best move, which it has turned out to be a great move because now I get to serve the mortgage broker community. And, kind of what you were saying earlier, 2015 was a much different market. The broker model, broker and non-del used to have about 60 to 65% of the market share. And then it went all the way down to like 7. Now it's back up to 30. I think it's going to continue to grow because what made that model always attractive was the flexibility. And at the end of the day, having been an originator, that's what an originator cares most about is how do I get the most deals with the least amount of headaches and I have the most competitive interest rates. Only way you can do that is if you're really that flexible. And that's why I thought it was a better model for the new future and the new guard. It just hasn't really been accepted all the way yet because I get it. Some people don't want to lose their businesses, and they don't want to also admit that maybe they didn't have their bets hedged very well. They were all in on one model and didn't leave themselves that flexibility. I had the fortunate to see that in 2014. I started building my wholesale channel, and I had wholesale and retail, so it's real easy for me to make those tough decisions when it's very black and white in the numbers.
We'll jump into wholesale in a minute. So in today's world, things have changed. This is not 2008 for brokers. Brokers have a lot of technology around them to basically make their life easier and be able to connect directly with the lender, with whoever they're using on the wholesale side. So what would you suggest today to those brokers? Should you motivate them to go into the banking side if they are passionate about the banking side, or should motivate them to stay where they are in the broker world?
Obviously, that's a decision that they got to make because you have to understand what the goals are. If you want to build something pretty large and scale, you can still do it as a broker. It just depends on, are you going to be more of a broker that just brings on a lot of loan officers and branches? It's just, there's a lot of different ways to go about it. If I was in the situation I was today, I wouldn't. I would stay, I may add non-del correspondent. I may get a line of credit to be able to be non-delegated so I have flexibility. However, I wouldn't go full banker, from the regs to how long you have to build up, how much staff is required. Recruiting is absolutely ruthless in that area. It is a churn and burn mercenary culture. I wouldn't mess with it today. Times have changed.
So on the banking side, now obviously you jump into it different times. Very smart guy. You decided to go into the retail world for a few years, 18 years, 17 years. I don't know how many years on the retail side. What was
I exited too? Well, it depends. I started in consumer direct. So first I was
Okay.
one of those call center churn and burn on the phone loan officers. Then I
Okay.
became a street LO. I guess that was more retail. Consumer direct's not retail. That's one of the confusions in the industry. Consumer direct
Yeah.
is it's consumer direct.
Mhm. Yep. Yep.
So then I became a
So
street LO like a year later. So I went from like 3 till about 22, 23 when I exited out of retail. So it was about 20 years I was in it.
So on those 20 years, on the consumer direct, on the retail side, what is the best thing that happened to you and the thing that you will say, this is what I don't like about the retail side?
The best thing that happened to me,
Yeah.
there's a lot of great people on the retail side. I got to also see, the industry got very small after the financial crash. It was a survivors thing. So there was like camaraderie and relationships like yours that I got to be that's by more important than anything you could ever do accomplish wise. So I got to meet a lot of great kindred survivor spirits is what I would say. What I didn't like about it, it's not what I don't like about it. It's more of an acceptance that I've come to terms with what I call as originator syndrome. What I mean by that is you have to really understand originators, and having been in a call center that was Chernenberg sweatshop that had hundreds that I met, along with on the street hiring, and I had a call center at one point too, hiring branches, hiring loan officers. There's a few thousand at this point that I've dealt with over the years. And that doesn't sound crazy because, at one point in time in 2010, 2011, people were going bankrupt and everybody was adding 20, 30 branches at a time. And it was just wild, crazy stuff. And what I mean by originator syndrome is you got to really understand what motivates them. And you got to also know their personality. Most of them are extroverted. Most of them, for the most part, want to kind of be a little bit of the center of attention and all that. There's nothing wrong with that. I was an originator. I'm an extrovert. I'm just a different type. You have to kind of understand that grandiose personality. Nothing wrong with it. What happened after the financial crash and really where Dodd-Frank got passed, the financial regulation bill is what it really changed. It changed too mercenary for me. It became a recruiting game. You had 5, 10 companies always recruiting, being out in the recruiting field. Branches were always all over us about our pricing and then telling me the guy down the street. And like, look, the guy down the street's trying to recruit you. No, no, no. A lot of people did 90-day rate sheets where they would give them a better rate sheet for 90 days and sorry. And there was a lot of that. You're laughing because you know what I'm talking
I
about. 'Cause people would
I
tell me that.
remember those days. Yes, absolutely.
I remember plenty of executives telling me like, there's no other way I can make money. They beat me up for everything. And it became too much of a culture that they really feel like they owe you everything. I mean, the attitude was, I bring you loans, you should be lucky. And I just, they don't understand the risks. And of course, their argument is you don't know the risks. Ironically, some of my own retail guys, and now he has his own mortgage broker shop, thought that too for a lot of years. And then when I started showing them the financials and really showing them the breakdown, they had no idea. How can legal be this much? Why are you dealing with that? Oh, this wouldn't happen when I dealt with. I'm like, yeah, sure, buddy. Okay. And then you opened up Pandora's box, and then they realize, oh, shit, this is like you're really the captain of a huge cruise liner ship. Like you just can't turn it the same way. There's a lot of rough waters. There's so much you deal with than if you just sit in your little origination bubble. However, what do you expect? Originator syndrome. They've got recruiters calling them every day, promise them the world. Salespeople are always going to want to check out all their options. So that's what I didn't like about it. I didn't like that it became a mercenary culture. And on the opposite, that's what makes wholesale so great. Because they have between me 3, 5, 10 different people. I get the loan, it's because I won. And I also got to diversify my sales force to have a lot more people on it. So yeah, I may not have a smaller captive audience that sends me everything, but at the same token, I have a much larger that sends me what they think we're the best at or what we can do the best at or where we can build the best relationship. And I like performing every day, which is required. In the retail space, you pretty much just have to perform at the end of the month. Here, you have to perform every day. You're tackling, and I think that's a lot more. It's the baseball player in me. That's why we play 6, 7 games a week. That's not like most sports. I think the activity is a lot more fun, and I think it just gives a lot more. So to answer you, that's what it was. Is what I loved was a lot of the people, a lot of the leaders that I got to meet. What I didn't like was just the mercenary sales culture. It's horrible.
Right. The it's hard to find loyalty in today's origination industry. Talking about mortgage, obviously. Loan officers normally are looking for the next step, the next paycheck, the next bonus. Now, obviously, I mean, anyone can say that at the end you're looking for their best, but the word loyalty is completely gone in the mortgage industry. It's really, really rare to see that anymore.
That's why
Let's
retail.
talk about wholesale. Yeah. So wholesale, you jump into wholesale the last few years. What do you like about wholesale now? Obviously, let's put aside the loan officers, but tell us about the wholesale experience now over the last
It does
few
have to do
years.
with originator syndrome there too. The difference is it's a different side. I'm not going to sit here and say that some originators, no matter what you do for them, it's like I say, you could save them from a burning fire, they'll be upset. What I have learned is there's a higher level of appreciation because a lot of them are entrepreneurs too. They're trying to run their business. So they understand you're a business too. So I say that the relationship, even though you're not on the same team, you're actually more on the same team than anything else. You have to understand in business, people
Yeah.
are going to do some unreasonable things.
So let's talk about people, Eddie. One of the things that I love about you is that you're always mentoring, always in the community, always good tips to everyone, and you don't care if they are a CEO, a loan officer. You're always trying to help people. Let's talk about empowering people. Are you the type that when you have someone, do you micromanage them for a few at the beginning, or you just, let them loose to show results? What style are you?
So you got to support your people. Micromanagement to me is usually a sign that you don't trust your people, which is really more of a sign on yourself because that means you didn't hire well. You're going to make hiring mistakes. And I'm a big believer in what you do is you give them guardrails, give them a wide road and let them make some mistakes. And then when they hit it, be like, hey, you hit the guardrail. I need to kind of straighten you and keep you back on the road. And then depending, if they keep producing and keep doing really, really well, you keep expanding the guardrails out. Some people, and you have to be very direct and honest with them and say, hey, look, it does not look like you can handle all this. How about we water it down just a little bit and then do that? A lot of them are very receptive if you're very candid with them, especially when you're looking out for their best interest because it's not fun to embrace conflict. It's not fun to tell somebody that they're not doing well. However, you need to tell them those things if you don't want them to fail. Because what I'll promise you is if you pour into somebody and they fail, there'll be respect there. If you let them hang out to dry and they hang themselves, there's going to be no respect there. So
Yeah.
I think at times the micromanagement word is kind of manipulated both ways. Some people say they have to do it to make sure somebody grows. No, you had to hire good people that want to take ownership because that's what really it's about and have self responsibility. But then at the same token, you can't give them too much rope at first. You got to. It's like a kid, teaching them how to drive a car. You got to go a little bit more, a little bit more, a little bit more, and then they can do it all on their own.
Right. Agree. Loan officers and realtors are always looking to grow their business, and one of the biggest things is all about personal branding. Do you believe in personal branding? On what's your style? Is it more about branding their own name or branding a business name? I see that you're big into your name. What's your uh, what's your take on this branding?
Yeah, no. And great question, by the way. I think now in the social media world, which is a lot more authentic and intentional, I think everybody's a brand. I think everybody has the chance to be a brand, and the brand's got to be you. And what I mean by you, it has to be your own unique. I think you is an acronym. Whatever your unique is, whatever you think that you can provide value, because at the end of the day, that's what you have to do is provide as much value as possible. I've looked at my brand more to share stories, talk about the mistakes, talk about the successes, give advice, more importantly, just really, I do a lot of it on video and none of it's rehearsed ahead of time. And I don't know the questions. I think that that's how you can really shoot really, really fast and see what's there and what can really articulate a story a lot natural. I think that's kind of more my brand is to be intentional because I'm doing it, but at the same token, not knowing the questions so I could be a lot more authentic. I don't even know if you did this, but on any podcast I go to, if they send me questions, I erase them. Like I don't want to know what the questions are because I just don't think you'll be as because what will happen is you'll read them, you'll start overthinking them, and then you'll screw it up, and then that won't be you, and then people think it's you. So I think it's a lot more natural to just be you and lean into that situation. That's good. It doesn't matter when people send them. My assistant knows better. I tell them to erase them. I said I'm not looking at them. I don't care what anybody tells me.
All right. So, uh, why I'm going to change a little bit into
Sure.
uh my wife is very passionate about DEI and Hispanics, African American, and all of these different cultures. Why would you say there's not a lot of Hispanics that are CEOs, mortgage CEOs?
Why are there not more? I usually don't see a lot of Hispanics study finance or something like that. They get into different types of businesses. Usually, finance is not one of them. And now you'll see a lot of them in real estate. That's the ironic part. However, the real estate finance side that we do, I mean, to be fair, I don't know if I'd have gotten into it had I not studied finance in college. Like, I just don't know if I would have gotten into being an originator or anything like that. I definitely like people and I like sales and I like building relationships and adding value. However, you got to know the financial piece of it. Don't know if I would have done that had I not studied it. I think because you have to start a company and then build it and then kind of become a CEO, you may have the title way before you become the person for a long time. I think that's some of it. I think other parts of it is, after 2008, a lot of the old companies are all gone. So if there was even opportunity for up and risers to get promoted to become CEOs, hired guns, let's say a hired gun CEO instead of starting your own company, those opportunities were blown away because all those companies went under. So it's like we all started from scratch in 2009, 10. Even though that's been 15 years to basically reshape an industry, it's not that long.
Yeah. And also the way that technology has evolved in those 15 years is being massive compared 20 years ago and today is just a completely different world on top of compliance. But so millennials are transforming a lot the way people are expecting or the way we used to expect people to work. In today's world, after COVID, a lot of millennials are used to work from home. What is your whole, you know, opinion about
Working from home,
working from home?
you know, I think with certain positions, it makes a lot of sense. When you're talking about this industry, I mean, I think operationally, when you're talking about underwriting, closing, back office, I think it makes a lot of sense. I think it makes sense in a lot of finances. There was in my building right here, there was an accounting firm that had five floors, excuse me, that went down to one floor at their new location. Makes sense because hybrid and all that became a big thing. I personally can't work from home. I tried it. It was a complete disaster, even if it was one day a week, because somehow just because you're home, they think I could not work. And I just learned that it's easier for me to go to the office. I kind of also like it. I take a lot of meetings in the car. I like driving. I'll listen to books. I'll take business calls. I'll do a lot more objective things than if I sit at home. Because even when I was at home a few weeks ago when we had snow one day here, I mean, kids just interrupted me all the time and would get mad at me when I'm on a call. They just, nope, it's snowing outside. You shouldn't be working. I'm like, that's not really how the world works. Just because it snows in Atlanta doesn't
Yeah,
mean that there's snow everywhere else. It doesn't mean that your dad doesn't do business in 50 states. So that's not really, it's what I always tell people. Like, you can't really tell your consumers, like, oh, sorry, we couldn't close your loan because it snowed in Atlanta. Like, that just doesn't even work. So I think what I feel for are the younger people that are going to lose that mentorship of face to face, because a lot of the experiences is hearing other people, watching what they're doing, even just noticing their schedules. The people start performing higher, like, oh, they're in here earlier, oh, they're doing this, oh, they're doing that. I think a lot is going to be lost, and I think one of the great opportunities out there is how do you build enough training platforms online and how to marry cultures. Obviously you've got to do it on video. However, I'm not going to sit here and lie to you. We're about 70% virtual today as an organization. It was simpler when we had locations and everybody was all together. It was simpler. I understand why it needed to evolve. I do, because
yeah.
gas expenses, even time of work, there's a lot of jobs that the people were introverts and they want to sit at home anyway. So kind of give them that autonomy. I think that's good. So it just really depends. But I do believe that young folks are going to suffer from lack of mentoring.
I mean, most of the big corporations in today's world, I mean, the Dells, Microsoft, Google, even the banks, Chase and others, that they all require now to work from the office now. But yeah, I agree. There are always going to be some positions that they should perform well from working from home, but not every single position, right? Especially,
Sales, I think it's very tough from home. Sales, I think you either need to be in office or you need to be on the road meeting with people. I think it's really, really tough to sit at home and do it. Really tough.
yeah, I agree. Uh, let's go into a prediction now. You have a magic ball somewhere there that is looking at the future. I know that some people say that you don't want to share that, but where do you see these next 12 months on the rates? What's your prediction?
It's not going down like people think. I've been saying that for 2, 3 years. People don't understand what drove interest rates. And they also don't understand why they're really lying to themselves when they think that this pending refi boom's coming. No refi boom's coming, and I hate to say that. It's very
I
simple,
agree.
basic elementary math. 90% of loans are below 6%. 90. 82% are below 5. We may see mid fives, high fives, but you're not going to see much. So how much is that actually going to entice to refinance? It may trigger some cash out refis because even if somebody has a lower interest rate, maybe they're in debt problems. However, that's not the same either because second mortgages have to actually exist again. And I'm not talking about just a home equity line, like an actual, say your credit's a little, dinged up because of how much debt you got. You can actually get a full fixed second mortgage and pay it all off. And then
Right.
they're like, but the interest rates are a lot higher. Yeah, but do you want to refinance the whole thing and put at a higher interest rate? And I'm not somebody who gets caught up in interest rates. I follow just the basic math. This is your current payment. This will be your second mortgage payment. When you combine them, if you can do a cash out refi, make it lower, then do it. However, if you can't, then you're just not putting your relationship in a better position. I don't think rates are going to go down. We still got the inflation problem and it's not getting addressed and it's going to take, it's getting addressed, but it's going to take time to fix. It's not overnight, especially when most of it is because the money supply that got printed during 2020 and 2021, that's really what's triggering that inflation. And interest rates, by the way, never went below 5% outside of World War II after it was over because only America pretty much stood out in the whole world. It didn't go down without quantitative easing. We have too high a debt levels. And it actually worked because they were trying to, after the financial crash, and there was so much deflation to actually inflate things back up to a higher value. You're not going to get quantitative easing to bring down interest rates. Nobody wants to talk about that in our industry that from 2008 to 22, the 7 or 8 refi booms were all manufactured by the government. And that's a fact. That's not me saying it emotionally. That's not saying, oh, Obama presidency, Trump. So this has nothing to do with Republican, Democrat. The Fed, who isn't one or the other, kept doing quantitative easing, and they're not going to do that again. So this la la land that rates are going to get into the fours, I've got some front beach property that I'll sell you in Florida if you want, I'll sell you my piece of the ocean.
I'm waiting to get the prices to come down. They are already, by the way. Florida and Texas, the prices are already coming down. So, talking about predictions and talking about politics, you already mentioned a little bit of names, but CFPB, what is your forecast? Would it stay? Would it disappear? What do you think about CFPB?
Pretty certain of this. I'm like 95% sure. I'm pretty certain it came from the financial regulation bill. So I don't think it can just disappear like that. Government agencies, you can really shut it down like instantly. I don't think it gets shut down, but what I will say is it will be significantly minimized. And I mean, significantly minimized is what I'll tell
Yeah,
you. But here's what a lot of people don't
sounds good.
realize. It's not going to get a crazy minimized because, Trump's 4 years, the CFPB fined and went after more companies than the previous 4 years before that. So I don't think there's going to be no regulation like some people are thinking. I just think right now, because I think it was yesterday. Yeah, yesterday they ceased everything. I think they're just trying to take inventory of what actually matters and then go after the bad actors. But I think
Right.
it's going to be minimized. It's not going to be just how the CFPB runs at time that they rule make through
Mm.
enforcement. I don't think that's a really good way to be.
Eddie, I'm gonna rotate into sports now, and I
Please.
know that you're a big baseball guy. Who's your team?
Braves.
Atlanta Braves. Okay. Second team?
Baseball?
Yeah.
I mean, look, my father's teams, because they had farm systems in Cuba, were Cincinnati Reds and the Boston Red Sox. So I've always had a soft spot for them. So I can't say they're my second team, but I hope they do well. Every year I hope the Reds and the Red Sox do.
uh, Football. Who do you go for in the Super Bowl?
I'm going to go for the Eagles.
Eagles. Because you don't like the Chiefs, or because it's your
Oh no,
team?
no, I'm a diehard University of Georgia fan. You know, out of anything, college football is probably, believe it or not, baseball is my favorite sport, but sports to enjoy, college football is probably my favorite. And you know, growing up and being a diehard fan since like '79 for UGA, they have like 5 or 6 players on the defense that won
Oh, okay.
championships at Georgia. So there's a, as you can see my Georgia helmet right here. Yeah, you can. That's why I'm rooting for them. No, I don't. I'm not one that gets into that. You know, I don't ever care about the competition. I always tell people that competition's a good thing. You know, Michael Jordan doesn't exist without the Detroit Bad Boys. That's just a fact. A lot of people have that zero sum game mindset of like, I'm going to annihilate every, you know, competitor. Well, then the problem is you're going to then suck too, because then eventually you'll have nothing to really fight for and you'll get complacent. So I don't get into that. Oh, they've won too much. My argument is, well, then stop them. It's just, you know, shut them down, stop them. And I get it. They have Patrick Mahomes. I get it that they have Andy Reid. They have a lot of good players. A lot of people don't give credit to their defensive coordinator, but that's why I'm going for the Eagles.
Well, I have to say I don't like the Chiefs, so I'm going for the Eagles. So that's the way it works. My daughter likes the Chiefs because obviously we know why. I mean, she's only 9 years old, so you can imagine Taylor Swift. But anyway, it's a fun times. Last couple of questions. Imagine, let's go back 20 something years. You are a young kid coming out of college, and you have yourself in front of you 20 something years ago with all of this experience that you have now. What would you tell your young you 20 something years ago that you never heard before, or that you actually, I mean, whatever you learned from all of this experience that you have now, what would you tell?
I'd probably tell myself to enjoy the moments more. I was always more for the future and go, go, go. I'm not upset about that, but I just say that there are moments to stop, as they say, smell the coffee, enjoy the ride. I don't know if I enjoyed the ride that well. I enjoy it great today, but I think for a lot of years I was having fun and I loved what I did, but I don't think I truly understood and enjoyed the ride of how special and how fun and how rewarding and how many great people. Unfortunately, like everybody else, it started becoming a bigger thing when, you know, mentors and people in the relationships that I'd had for a long time started dying off, that I maybe realized that I took some things for granted. Not on purpose, not being malicious, just being human and being determined at times can cloud you from seeing the trees, seeing the forest, seeing the flowers.
Eddie,
Right.
why is it that we don't listen to the mentors when we are young, when we are in our, I mean, the early 20s? Why is it that people, especially young kids, don't listen to the mentors?
Because sometimes they have a harsh reality that those people were once in their 20s too. It's kind of like, why don't people listen to their parents in their teen years? They forget that their parents were teens as well. Because, you know, because you kind of view your mentors and your role models kind of as superhumans at times, not that they're just regular humans. So I think that's a lot of it, is just that, you know, you take things for granted. You just really do. And not on purpose. You feel like you got to go in hard every day, and that's what you do.
So with that said, what would you tell a young loan officer, a young realtor, a young professional in their early 20s, finished career, or at least starting a new business, either mortgage or in real estate? What would you tell them? Like, listen, I mean, this is the voice of experience. What is it that you will tell them now
Easy.
to, other than smell coffee, obviously, but on the business side?
That's easy. If you want an easy life, you got to make the hard choices when you're young often. That means you can't go out to the bar and you need to work 12, 14 hours that day. That's what you do. You know, when you're young, you can cheat time because you have a lot of energy. You can make a lot of mistakes and they won't really hurt. And people are kind of expecting you to screw up a lot. So your rope of error is a lot longer. So I would tell you, where you want to see yourself in 10, 20 years, start doing it now and go really, really hard at it, because, you know, now at my age, we can't make mistakes without it being held to a higher standard. In your 20s, early 30s, I mean, it's almost like you get a get out jail free card. And that's why I say is make the really, really hard choices when you're young and you'll have an easy life.
Totally agree. My friend, thank you for sharing your wisdom.
My pleasure.
And, this was the today's People Matter show. This is all about helping others with stories like yours, and especially with good advice from people like yourself. Anything else that you want to add?
I always tell people to have fun, enjoy the moments, have fun with the people. Whatever you're doing, following your passion, doing things that are great. Make sure the people around you that you enjoy the time with them and have fun with them, because if not, it's going to be miserable. Even if you're winning, but it sucks, that's called toxic. Got to make sure that you enjoy the camaraderie and those that are with you on the field of battle.
Yeah. Well said. Thank you, Eddie.
Thank you, my man.
Appreciate it.